Hi everyone, welcome to Morelia, where my mother-in-law's orchids are doing very well, as you can probably see there. So last week, the risk-off in oil continued accelerating on Friday because the leader of Hezbollah effectively, I wouldn't say it was conciliatory, but he talked down direct war against Israel, which was the concern because that would amount to Iran versus Israel war through the Hezbollah proxy and would open a second front for Israel. The Iranian side of things directly impacts the oil market, but unless Iran gets directly involved, at the moment the Israel conflict is limited to the shutdown of the Chevron's Tamar field and some impact on European gas, which we're beginning to think about, and I'll come back to that. As for oil dumping on Friday, that was reasonable because there was always a risk of a second front. You have to remember that Iran is very heavily exporting oil to China, so we don't see a great risk. At least I think the Chinese are going to massively oppose any great risk to Iranian oil exports, which majority are going to China. And as a result, the Straits of Hormuz fears and the Iran fears, I think, have been overblown. And we've seen the risk entirely come out of oil from the invasion, from the Hamas attacks, October 7th. We've given it all back. What's interesting is we are now hitting the SPR refill level of $79 a barrel WTI, and so that should provide a floor here. At the same time, last week, because of risk off, was the biggest short squeeze of the year in the wider market, which is saying something because we've had some doozy short squeezes this year. I think most people came in bearish, and we've ended up with a good year for the market, basically. And as a result, we had a major repositioning all last week, culminating in Friday. As we squeezed short, all the garbage went up, and the big stuff went down, including the oils. And I think, notwithstanding oil holding here very likely with the help from the SPR rebuild, let's see, but it probably can hold here. Distillate remains tight, and we're headed into winter. And as I mentioned, there are a couple of issues with LNG from Egypt that may help tighten what looks like a very well-supplied European market. I just spoke to London, the Financial Times. They were saying, the guy was saying the weather's somewhat cool there, and hearing that it's quite cold, somewhat cold in New York, but of course it's an El Nino year, and so the potential is there for a winter to happen, which will change pricing. Obviously, we'll see what happens as we head closer to winter. It really, on our old line has always been December the 5th should be the first snow in New York, so we're about a month away. And in the meantime, everyone tends to be in a very good mood in the market because, of course, we're heading into Thanksgiving and then Christmas, and we get our Santa Claus rally. With the repositioning here and with the US economy being so strong, we were highlighting that the US economy, people don't talk about the absolute scale of its growth. And what we did in Q3 alone was to add an entire Qatar, believe it or not, the entire GDP of Qatar was added to US GDP. Year to date, the US has added an entire Ireland or a Sweden. And that, of course, is important just in terms of its sheer scale of economic growth that you're seeing here. Efficiency is very obviously growing in the US, but the sheer scale of the economy is keeping oil demand very well bid, with the real key fuel here being distillate. So I think oil will hold at decent levels here, 80 to plus WTI into winter, and these oils are still a pretty good place to be. It's just I think the market will probably go up faster now as we head into Christmas. Finally, on Hess and Chevron, I thought there would be more agitation for either a counter bid, which is difficult to see who would do that bid, or maybe a sweetener from Chevron. But as far as I can tell, the managements were on the road last week, and client feedback is that they don't get the sense that there's going to be a counter. You have to say that Chevron's results were poor insofar as the issues in Kazakhstan, which really underline the fact that they really need, and Hess is a great deal for Chevron. And I think John Hess, having committed, is unlikely to back off. It's hard to see any other company apart from Exxon that he would want to be a board member of, board seat holder of, and shareholder of more than Chevron, except Exxon, who of course are busy with Pioneer. So it looks like the Hess-Chevron thing is going ahead as we thought, and Hess has behaved a little bit better, but is basically still in line with approximately where the Chevron deal is, with a much lower price implied, of course, from Chevron selling off. But with the Permian issues being noise, in our opinion, on the Q3 results, we should see stabilization there. A couple of questions around BP. Will there be an external CEO? Will Shell buy or merge with BP today, which are quite interesting. But the main thing is we're expecting an external CEO to emerge from the total mess that they've got themselves into with the third CEO resignation in 20 years. That's one that we're also watching. And I'll leave it there. My flight's already delayed, but hopefully I'll be back in Brooklyn tonight and working from New York as of tomorrow. Have a great week.